Well, Kelly, it's really interesting. We are seeing some selling pressure, and this is the fits and start that we expected. We've been trying to measure local and state governments reopening, businesses reopening, and you are seeing some emotion in the tape. But let's be mindful that the volatility, the VIX, it's not even above 35. So that type of emotion, I think it's presenting opportunity as we go into the end of the month. So we're looking to rebalance into some sectors and some specific names.
What gives you confidence that this isn't the beginning of a deeper slide for the markets?
Well, so that's a great question. In this time of emotion, Kelly, I think it's so important for active investors, institutional investors to really rely upon the technicals. We look at the technicals in the S&P 500, and we see it's still above the 200-day moving average as well as the 50-day moving average. So that strength that's being revealed, there's been a lot of tests. I think that's actually quite constructive for the marketplace. If we continue to back and fill and consolidate around these moving averages, that allows the markets to move higher. But that is providing a lot of confidence right now.
So if that said, you think that this, broadly speaking, Jeff, is a buying opportunity?
I think it is a buying opportunity. I know we were on 2 weeks ago talking about the retail sector being very specific. We talked about buying Gap 2 weeks ago, but today I want to look at some of the software names. We've really seen assets attract to software, but we're sticking with themes in biotech. This global sense of urgency in the biotech. These are names like Amgen, Gilead, Horizon Therapeutics. We have seen just sensational move, and we don't see that abating. That sense of urgency in the biotech as well as technologies is going to persist. So we're sticking with themes. But one thing we got rid of, Kelly, really interested in our ETF model portfolios, we sold utilities this week. For the first time in over a year and a half, we have checked and harvested those gains in utilities and walking away from that consistent, prudent approach owning utilities.
I mean, that's interesting. I would have been more interested if you said you were selling big tech.
No, I think it's interesting that our models are telling us that it's time to put on more beta. We're staying above these moving averages. It's actually showing relative strength. So therefore, we're getting rid of that lower beta utility play and walking into the higher beta names, being prudent and sector tilted. But at the end of the day, we're selling utilities for a reason, Kelly.
Do you know anyone who wouldn't want to own Amazon, Google, Facebook, FAM, so to speak?
No, it's amazing.